Listen up, stock investors and traders. If you're tired of chasing overhyped, unknown stocks and you want real explosive opportunities in the AI infrastructure gold rush that's been printing out money right now and for the past year, then you need to watch this. Today, I'm going to break down 5 data center stocks that are positioned right now at discounts for you. They have great entry points and potential to explode as hyperscalers continue to dump hundreds of billions over the next year and then into the trillions into the AI buildouts. I'm going to show you exactly what you need to know about the stocks, the sector, and put your finger right on the charts. I'm going to show you exactly what you need to know about the stocks, the sector, and put your finger right on the charts to show you what's happening and where these stocks are headed. I'm talking about APLD, that's Applied Digital. I'm talking about IREN. I'm talking about CORZ, Core Scientific. I'm talking about EQIX, Equinix, and I'm talking about DLR, which is Digital Realty Trust. Those are the ones that I'm going to cover today. As I'm currently speaking, we're talking these are undervalued plays with massive contracts, insane growth runaway, and catalysts that could send a couple of these stocks running 100% or more in the next 12 months based on analyst targets. I'm going to show you exactly which ones have the edge, the risk, the price targets, and the smartest way for retail investors and traders to play them. If you want to get positioned before Wall Street piles in, press that like button for me. Drop hashtag AI Data Center into the comments for me. Stick around because this is going to be exciting. This is one of the most important videos that you'll be watching this week. And then before we dive in, hey, happy 4th of July. Hope you guys have fun. Hope you guys had a safe time. And do me a favor, hit that subscribe button for me. Let's dive in. All right, so the first one that we're going to cover is APLD, Applied Digital. They've had a run, massive run in the past year. If you haven't been paying attention to them, I'm going to go ahead and read us this article right here first from Insider Monkey. Wall Street thinks you should buy the dip on Applied Digital stock. This was posted up on July 2nd on Thursday, the last day open session before the July 4th holiday. Right here says Applied Digital is one of the 10 Bitcoin miners that are now a data center companies. Applied Digital Corp has seen some bullish analyst activity recently, with Northland revising the target above upward of $56 to $82. Wow, that's incredible. You know, the last time that I checked up on them earlier in the year, I think they were only at about the $50 range. Now they're kicking it up to the $80 range. And at one time earlier this year, I'm telling you all, after December, after all the stocks dipped down, Applied Digital was at about $20. So they went on a massive run, no doubt about it. And then right here it says, in addition, Northland Craig Hallam also raised the price target on Applied Digital from $79 or to $79 from $75 on June 9th, reiterated a buy rating. The upward price target revision reflects impressive 109% upside from current levels. The main reason for Craig Hallam's optimism is the company's announcement of another lease with a US-based high investment grade hyperscaler. All right, now if you're not sure what Applied Digital does, okay, all these are AI infrastructure stocks, okay, but essentially Applied Digital, they build the high density digital real estate that keeps AI supercomputers cooled and powered, okay? That means all the GPUs that Nvidia is building, they're going into these buildings, the real estate that Applied Digital is putting, okay? An example is Polaris Forge out in North Dakota. They've got a couple of these buildings that they're putting out there because they got a lot of energy and power out there that they were able to get a hold of contracts for these data centers. The Polaris Forge 1 is a massive 400 megawatt capacity AI factory campus that is entirely leased out to high-performance tech giants, okay? So that's what Applied Digital does. Now, let's go ahead and take a look at the chart here. Here, I'm going to dive into Applied Digital's performance, okay? If you take a look at the main Blue Mountain chart across the top, you can see we've had a massive run-up over the last year, but recently, things have taken a sharp turn, of course. The stock has just closed down nearly 7% at about $33-ish, and the technical indicators are telling us a very clear story right now. First, let's take a look at the moving averages to see who's winning the trend, okay? Look at the red line on the screen. That's our 25-day moving average, okay? That's this one here. And if you followed it all the way through, okay, up until recently, the stock was trading safely above it. But notice how the stock has completely fallen below that red line now. And that's a sign that short-term momentum has firmly shifted to the sellers. Now, if you look just below that, there's the orange pinkish line. That's the 100-day moving average. That's our key line of defense for longer term trend, if you think about it that way. The stock didn't just break the red line. It actually sliced right through this orange line too, closing down at $33 and about $33.06. Breaking below both of these key levels, in my opinion, is a major warning sign and definitely a red flag for the bulls already if you're still in the stock or if you're looking into buying the stock, right? We'll touch more on that. Now, if we take a look at the RSI, the Relative Strength Index, okay? That's this white line that goes across right here. It measures buying and selling pressure. It's currently sitting at about 32.54 right now. Basically, anything under 30 is considered oversold, which means that the stock is practically getting close to that point. I mean, in my opinion, it already is at that point. However, right now it shows that, you know, the bears, okay, the bearish ones are completely in control and driving this thing downwards. And then finally, we're going to take a look at the MACD, which is this line here. I don't know why this chart is actually having all this right here, but the MACD line is right here. And if you notice how those green bars faded and now they have a cluster of red bars pointing downwards over here towards the right, that's a bearish sentiment right there. More importantly, if you take a look at the green and orange lines that are crossing over and heading downwards right here, this tells us that the downward momentum is actually speeding up, not slowing down. At the end of the day, right, I mean, it's simple. If you add all this up together, APLD Applied Digital is in a heavy pullback. It's evident by the price dropping, and then with the stock breaking below both of the major moving averages that I've set up here and the momentum pointing straight down, it's a risky spot to jump in right now, in my opinion. I know a lot of folks consider it a great buy right now, which, I mean, it can be. It certainly can be, but it's a risky spot to jump in right now. That's my opinion, okay? We want to wait to see if the stock can find a floor and stabilize before looking at a reversal, meaning coming back upwards. Keep this one on your watch list. I mean, it's certainly a great speculative company to follow and maybe even invest in the long term, but certainly exercise caution right here. I mean, if you're looking to get into this stock, the best way to enter this stock is to definitely not like do what they say, catch a falling knife, right? Because it's still taking, the velocity going down is really, really fast right now on its downward trend. The safest entry point is to wait for the stock to stop dropping, establish a clear support level, right, where it's kind of consolidating a little bit, and then watch for the price to cross back above the 100-day moving average on strong trading volume. Now, if you haven't, if you're not sure how to check out the volume, right? I mean, in a lot of my other videos, I show folks how to actually find the volume, and you can find it on Yahoo Finance. They've got it there as well. You just got to take a look at one of my other videos, and I show you all how to go through that. At the end of the day, ideally, we want to see the MACD at the bottom, right? This thing on the bottom right here, make a bullish green crossover to confirm that buyers are actually officially back in control, putting more money to work. So kind of like this point right here, where it crosses, the green crosses back up over on top of that pinkish line. So that's what you would like for Applied Digital. Since we've covered Applied Digital, let's move right into CORZ Scientific, okay? And CORZ Scientific, they essentially do something very similar to Applied Digital. I mean, they're a massive infrastructure pivot that went from Bitcoin mining essentially into high performance AI data center hubs, just kind of like Applied Digital as well. An example of their work would be that they have huge operational sites with ultra dense servers in Texas and North Dakota as well. I mean, they heavily upgraded to handle 10 billion enterprise contracts, so or 10 billion plus enterprise contracts. So they're doing they're moving at a really high speed right now as well, like Applied Digital. CORZ Scientific, I've got the chart pulled up, but let's go ahead and read a real quick article on what's going on with them first, right? This one's from Insider Monkey as well. CORZ Scientific's data center pivot could see the stock gain 50% from here on. That sounds pretty good. This article came out July 2nd on Thursday, the last trading day of the week as well. And right here, same thing, similar to Applied Digital. They're one of the 10 Bitcoin miners that are now AI data center companies based on the research released on June 24th. BTIG analyst Gregory Lewis raised the firm's price target on CORZ Scientific from $33 to $38 while keeping a buy rating. The revised price target offers an additional 46% upside from the current level. So they have a pretty good way to jump going upward, specifically right now after all the pullback and the sell-off with AI infrastructure and semi stocks. So right here it says, however, not all analysts share the same level of optimism. On June 16th, Freedom Capital initiated coverage on Core Scientific with a hold rating and assigned a price target of $33. The firm believes the company has strong long-term potential as a co-location provider, especially given that AI data center capacity is currently limited. The firm's neutral stance on the stock reflects its belief that much of its expected future growth in 2027 and even 2028 is already reflected in the stock. So definitely, I mean, we've got to keep some risk management, right? I mean, there's some things on the horizon with the AI optimism. I mean, a lot of that has been already baked into all these stock prices. That's why they've all climbed up so high. So something to keep in mind if you're interested in Core Scientific. Now let's go ahead and take a look at this chart here, okay? So here we've got Core Scientific with the ticker CORZ. Let's see exactly what's happening with this recent price action, okay? If you take a look at the main Blue Mountain chart at the top, you can see the stock had a massive run over May and June, peaking over $30. But over the last couple of weeks, we've seen a sharp pullback. The stock is just closed down nearly 10% in the regular session at $21.43. Let's break down where the floor might be. Okay, so first, if you take a look at the red line slicing through the blue area, the 25-day moving average, this is the EMA, okay, the exponential moving average, which sits at $25.20. You can see that the price has aggressively fallen below this line. When the stock price drops under its short-term average like this, it means that sellers are firmly in control right now. And then if you take a look at the next one, okay, that orange, pinkish, reddish line, light reddish, that's what I try to make it. That's the 100-day EMA sitting at about $20.62. And if you notice, right, the stock price is plunging straight towards it. The 100-day line is a major psychological floor for a lot of the institutional investors. Strong stocks tend to bounce right here, but I mean, if it holds, that means that it's going to be a healthy pullback. If it breaks below that 100-day line right there, we're going to see, or we could see, much deeper drop. That's just my opinion. So be mindful of that if you're thinking about it. Let's move to the RSI, the 14-day RSI right here. That tracks again how the stock is being bought, if it's overbought or oversold right now. It's at about 29.63. And practically, again, anything under 30 is thought as to be oversold. So, of course, it's in the oversold mode right now. If it's over 70, it's in the overbought mode. So oversold, that means a lot of sellers have been selling, but selling aggressively, but at the same time, right? I mean, it could potentially be that, you know, so the sellers can get exhausted as well once it goes down real low. So something to kind of consider when you do your analysis on what's going to be palatable for you, especially if you're interested in Core Scientific. Lastly, let's take a look at the MACD line. That's also known as the moving average convergence, divergence. And if you take a look towards the right, we've got, so the white line is the MACD line, and then it had just crossed under the red line, which is the signal line. That just means right there, I mean, the momentum's bad right now. Bottom line, CORZ, Core Scientific, in a steep short-term correction, but it's fast approaching a critical test. Keep your eyes on that 100-day moving average that I mentioned about. Also keep an eye on the RSI to see if momentum or the buying starts moving upwards a little bit for that type of momentum. The most effective entry strategy right here, in my opinion, is to wait for the stock to hammer out a floor and not just like buy the stock because it's dipped so much if you don't want to be there. Instead, you know, I mean, in my opinion, you want to see it catch a little bit of momentum and start going upwards a little bit first with higher RSI. That'd be a much better idea. But again, right, I mean, not financial advice. I just want to share this information with you all. So that's Core Scientific. Next one up is going to be IREN. Now, IREN is known for capturing and monetizing green renewable energy to power the next generation computing, right? They're splitting their power and capacity between Bitcoin and specialized AI data centers. For example, they have a Texas campus, which is a massive 750 megawatt, 100% green energy powerhouse spanning nearly 600 acres in Panhandle, Texas. So that's what they do. You can dig more into IREN, but we'll go ahead. Same thing. I pulled up a article right here on IREN, and this one's from Simply Wall Street. It says IREN stock sees a fair value lift on AI data center contract optimism. It was published July 2nd as well on Thursday. And for all of these articles, I try to get more recent news for us. That way, you know, you guys are up to date. So right here it says the updated blended fair value estimate for IREN has moved from $70 to $80, a shift that puts fresh attention on what is driving analyst models for the stock. This change sits against a backdrop of enthusiasm around IREN's AI data center contracts with Microsoft and Nvidia, while also being tempered with concern about execution risk as the company moves away from crypto mining. Read on to see this evolving narrative that could shape your own view on IREN over time. So practically, yeah, I mean, they've got deals with Microsoft, Nvidia. That's what making a lot of these companies real hot and popular right now. Same as Applied Digital and Core Scientific, right? I mean, they're partnered up with CoreWeave, they're partnered up with Nvidia. So they're all, I mean, that's what's driving this data center stocks, all these data center sector going up. Now, right here it says Jefferies initiated a coverage of IREN with a buy rating of $79, highlighting what it could see as compelling pivot towards a vertically integrated GPU cloud model and an extraordinary large powered land bank. B. Riley lifted IREN price target, including a move to US $96, citing 800 megawatt. Cantor Fitzgerald raised its target to $99, pointing to Microsoft AI cloud service contracts. So all these, I mean, they're all jumping up right now. All these price targets looking pretty good. IREN right now only currently at $38. Wow, the last time I had kept my eyes on IREN, they were roughly at around this mid $60 range, and I'm surprised to see them drop down that much. So let's go ahead and take a look into the charts, see what it tells us right here, okay? If you take a look on, of course, close of July 2nd, the last trading day, they dropped over 10% here, down over $4 on that day, landing at about $38-ish. And that's, you know, it's a big drop from that mountain shape right there, suddenly plunging, if you can tell, right? Take a look at the red line going through. Again, that's the 25-day moving average. And if you notice how the price has fallen below it, right? That tells us that the short-term momentum has turned heavily bearish. If you take a look at the orange line below it, right? That's the 100-day moving average, same as all the other charts that I had shown already. The stock didn't just break the short-term line. It crashed straight through this long-term support line too. So guess what that means? When a stock goes below both of these lines, I mean, that's a major warning sign that the bearish investors are firmly in control. That's my opinion, at least. And that's something that you've got to be aware of if you're trying to move in on this stock. So just in case. Now, if you take a look at the RSI line, again, that's the white line. It's at 30-ish right now, and then of course 30-ish, what does that mean, right? 30 means that it's moving toward the oversold part. You want to kind of watch for that to go upwards before, if you're trying to move into that stock, meaning trying to add that stock into your portfolio. But I mean, hey, whatever works for you. I mean, I'm not a financial advisor. Again, I'm just trying to give you my 2 cents here. Anyways, the translation for this RSI line, it's been beaten down fast and hard. But while, I mean, it's got selling pressure, they're extremely awful right now, right? It also means that we might be getting closer to a temporary bounce as well for the buyers to step in. So keep an eye on that, right? What goes down, I mean, it's going to want to try to revert back to the mean. So it might try to jump back up. Not sure when, of course. That's why we got to keep an eye on that. The last thing is on the bottom, the MACD line, okay, which is the green line. It's dipped under the signal line right there. And then, of course, that just means that it's got downward momentum. That downward momentum is on a speeding velocity, which is not looking too good. But my overall assessment on this is that IREN is in a tough spot right now. It broke its key safety nets, and the momentum is firmly downward for sure. There's no doubt about it. However, because that white RSI line right there shows heavily oversold, again, just keep a close eye on it. If it starts going upwards, having more momentum, keep an eye out on the volume as well. If it stabilizes the hurt that it's going through right now through next week and moving forward. Let's go ahead and now move into EQIX, EQIX. That's Equinix, and they've been in the data center game for a long time. They're a premier global connection hub of internet, acting as the intersection points where, of course, corporate networks physically plug into cloud giants and each other. Their Silicon Valley and their Virginia data center campuses, of course, provide global internet exchange points where thousands of tech systems shake hands instantly. I mean, they're huge. So with that being said, let's read on this article here by Insider Monkey as well. Came out Friday, July 3rd, which was a couple days ago. The Stifle backs Equinix as AI infrastructure demand drives data center growth. It sounds pretty good. Equinix ranks among the best real estate and realty stocks to invest in according to hedge funds. Following meetings at the NAREIT week conference, Stifel reiterated its buy rating and $1,250 price target for Equinix Inc. On June 4th. The firm stated it's still optimistic about Equinix's capacity to profit from a faster AI infrastructure cycle. Stifel also stated that enterprise engagement is rising as deployment transitions from trials to distributed systems. So this is how those data centers look like. They're like practically a huge warehouse with a whole lot of plugins, kind of like a whole bunch of computer plugins made of fiber optic primarily, but then of course some of the old school stuff could be using copper or wherever that it's more beneficial for their services. Right here says, according to Stifel, the shift satisfies the need for latency sensitive operations that benefit Equinix. Sprawling, interconnection rich architecture, the company continues to operate on an unrestricted development pipeline aided by utility ties and supply chain management. So I mean, it sounds pretty good for Equinix. I mean, they've gotten a buy rating and $1,250 price target. Let's take a look into their chart to see what's going on. So right now, if you're looking at this chart here, you can see that they've had an incredible run starting earlier this year, climbing all the way up past 1100. But if you take a look at the far right, there's the steep drop. The stock just closed at $1,002. They dropped 1% only, but that was $11.60 the last market session. And as far as the moving average goes, if you take a look to see how serious this drop looks, I mean, just take a look at that red line right there hugging the price area. So our 25-day moving average usually tracks the short-term momentum. And if you notice, right, the price just sliced right through it like butter, of course. That tells us the short-term buyers have completely lost the control right now. And if you take a look at the 100-day moving average, that's the orange line. The stock is sitting right on top of this line this very moment, right? I mean, that's what we would consider a battleground right there between the buyers and sellers. A massive battleground, if anything. If it breaks below that line, the orange line, okay, things could get kind of ugly. But, you know, who knows how it's going to go. I'm optimistic about all these data center stocks. So, let's move over into the RSI. It's currently at 31.54. I mean, of course, that's a bearish mood right there. It's being oversold right now, just like all the other stocks. And then if we move to the MACD, you can tell the green line has dropped down below the signal line. The MACD line has dropped down below the signal line. So, of course, at the same time, that's a bearish downward signal right there. I mean, it's confirming the downward momentum and that it's the downward momentum's actually speeding up. Bottom line for Equinix, I mean, again, they're at a critical turning point, as I had mentioned, with that 100-day moving average battleground right there consolidating. Let's see if they can actually jump back up. If it holds right there, it's a great dip buying opportunity. If it breaks down, expect to see it continue to move downward a little bit. So if you're planning to move in on that stock, you want to make sure that it gets back up above that 100-day moving average. At least that's my opinion. And then the last stock that we've got is Digital Realty Trust. And let's go ahead and read this little quick article here. What to expect from Digital Realty Trust next quarterly earning report. This one came out on July 2nd here. Right here says, with the market cap around $62 billion, Digital Realty Trust is a leading global provider of data center, co-location, and interconnection solutions, helping businesses securely connect their data applications and ecosystems. Through its digital platform, the global network of over 300 data centers across 55 metros in 30 countries, the company enables digital transformation, cloud adoption, AI innovation, and efficient data management. The Austin, Texas-based company is expected to release its fiscal Q2 2026 after market closes on Thursday, July 23rd. So that's about 19 days from now. Okay, so keep an eye out on that one if you're interested. See how the sentiment is and see if it provides a catalyst for this stock to go up, especially as it has come down a little bit like the rest of them. And it finishes up saying it exceeded Wall Street's bottom line estimates in the past 4 quarters. So I mean, that's definitely a bullish sentiment. Let's jump right into the chart to see how DLR is doing. Okay, they closed at $173.30, but was down $3 on Thursday, July 2nd, the last market session. The as far as the moving averages, we've got the 25-day moving average. It's dipped down below past the 25-day and 100-day. That was caused by the sell-off, of course, the market rotation. Institutional investors, fund managers, the smart money, they want to move all their investments into more safe grounds, before the holiday weekend started with a lot of uncertainty. They don't like uncertainty, and that's what caused this right here. We'll see. We'll have to wait to see if it ends up going back upwards next week. And oftentimes we've seen that a lot already, right? I mean, if you take a look right here, that essentially happened right there. It essentially happened right there. It's been happening quite a bit. If you move over to the RSI, we've got it at 32-ish as well, similar to all the other ones, okay? So, I mean, they've been oversold. Of course, evidently with the price going down, I mean, it's been oversold. I mean, that's what it says practically. Same thing here for the MACD, green line below, the MACD line below the signal line, downward momentum, bearish signal. It all lines up. All the data center, okay, as you can tell, right, none of the stocks were singled out. They were all hurt. That means that it's sector-wide, or at least it's this industry-wide. So the fundamentals, at the end of the day, it's still strong. Not to say that, you know, I mean, a couple of these stocks are still speculative stocks as well. You still got to use caution. But at the end of the day, I mean, it's the sector that, or the industry that has gotten hit. And then, of course, I mean, if you think about Micron, Nvidia, SanDisk, Taiwan Semiconductors, they all went down as well. So AI got hit hard, but of course, they started moving into the defensive, into more safe haven stocks. We'll have to see how things look like at the beginning of the week, this upcoming week, and see how the sentiment is if they want to come back in and buy, because it's such a great opportunity with this dip. But before you do buy in, okay, again, I would suggest, in my opinion, see the momentum go up a little bit. Watch that volume and profit go up. Watch this RSI gain move upwards so that we have more buyers coming through. And then, of course, at the same time, you want to see this price at least kind of match up back with the 100-day moving average before you can move in there confidently. You don't want to catch it while it continues to move downwards. So the entire sector, the entire industry for the AI data centers, just keep a close eye on how they all perform, and you know, see if they all move in a pack, moving upwards before you get in on it. That's my take on it, okay? So that's all I got for you guys. If you like this video, hit that like button for me, hit that subscribe button for me. I hope you guys had a great 4th of July, safe 4th of July, and best of luck next week trading session or beyond that for you all. I will see you all next time.